Hi, I'm Chad Huebener with Edina Realty, and today we are doing things a little bit different. We got a Zoom call with lender, loan officer Shane Hofmann with Edina Realty Mortgage. Shane's done a couple videos with us throughout the year. This is the first time we've been doing it remotely. Shane, why don't you introduce yourself again and your company, and we'll get into a couple topics that we're seeing today.
Perfect. All right. Like Chad said, my name is Shane Hofmann. I'm a mortgage consultant with Edina Realty Mortgage. Been in the business aging myself a little bit, about 17 years now, the last 9 with Edina. So we're living in a different world now, Chad. A computer here, so.
Absolutely. So that'll kind of be the theme of our call here is kind of some of the different things that we're seeing in the mortgage world over the last few months with COVID-19 and kind of the summer of 2020. So kind of first thing, that's the main question that we always get, or what's happening with the interest rates. So tell us a little bit about what's going on.
Yeah. Well, if anything's good with COVID, it's been rates, right? I mean, they've continued kind of to slide down a little bit. And we get, I know I get caught up and say, hey, rates are low. Well, what does that necessarily mean for someone? So, for example, just from a numbers standpoint, as a mortgage consultant, I'm kind of a numbers guy, but let's say somebody wanted to have a $950 payment. Well, last year, if rates were at 4%, that means they could have a loan for $200,000. Okay. Well, now with rates hovering around 3 right now, which is just incredible, that same $950 payment means you could have a loan for $225. Okay. So, that's $25,000 in buying power just because the rate's at, 1% lower.
Yep.
And that's kind of in a lower price point too, so if you would get up to that, 400 mark, last year, if you want a $1,900 payment, for example, that would have been 400,000. Same payment this year at 3% is 450, 50 grand in buying power. And that's real. Those are real numbers, that can change things for someone. If they can go from, hey, I know I can get a house for 450 compared to 400, that might open up something completely different for them, So rates have been, like I said, kind of hovering around that 3. I don't like to quote rates, but for somebody with good credit and good down payment, they'd be sitting around that 3 mark. So.
Absolutely. And we're kind of seeing that too with some of the offers that we're receiving on our listings and buyers that we're working with is they're able to be a little bit more aggressive or up their searches for different types of properties, which is kind of fun to see. So next question is, or the next topic is there's a buzzword or a word that we really, for the first time, we've heard about it many years ago, but really started dealing with it back in March, the word forbearance. So why don't you tell us a little bit about what forbearance is and what it means to you into buyers.
Yeah, so this is definitely a hot topic because unfortunately, I don't want to act as a negative with this, but they kind of threw this out right away in March without a whole lot of guidance for us as lenders, right? So since then, the Fannie Mae and Freddie Macs of the world have to kind of generate some guidelines around what that means for a buyer. So, forbearance essentially means the lender is willing to stop payment for them for a little bit, whether it's a 3-month break, 6-month break. That doesn't mean that they don't have to make that payment eventually, right? They're tacked on at the end of the loan, or they'll, the next 12 months, they'll adjust the payment to make up for that time off or whatever. But it doesn't mean you're just forgiven from that. Okay, so that's very important to understand. But the bigger piece for us is, as lenders, we can't go and give you another loan if you've missed a few payments. Even though you're still in quote unquote good standing with the lender, you haven't made timely payments for 12 months. So a couple of transactions I've had recently where essentially the buyer had to go back and just make those payments that they had missed and get out of that forbearance period before they go buy something else. So that's very important to understand that if you're going to try and get some new lending, you might have to go just make those payments to show that you've been essentially making payments for 12 months.
Sure.
So is that if you are buying or selling or anything, and you take your forbearance, that's one thing. But if you are trying to go do something different, you might have to retroactively kind of go back and pay. So.
Yeah. So do the banks, are they marketed on your credit score if you do miss a payment? Is that it's showing up like a normal missed payment, or is there a notation regarding forbearance on there? How do you know about that if you're not told by a buyer?
Good question. So basically I just pulled a new credit report today that just had a 0 payment on it, which is their way of saying they are in forbearance, but there's no late payments. So the nice thing that they did with forbearance is it's not going to be a credit hit for you. So it's not going to negatively affect your credit. So it's not going to affect your score, but we get notified that they're in forbearance.
Got it.
Not only that, like when we go into underwriting things, we have to go get a supplement from their current mortgage company to see that they've been on time for 12 months. So there's kind of an additional step there as well. So one way or the other, we would kind of find out if you're in forbearance.
Got it. Yeah. So that brings up a couple things too. So if you've done a forbearance, tell your loan officer, right? Before you get too far, so we can work through it. Right. It's not the end of the world. And if you maybe haven't, if you're thinking about going down that road, maybe talk to a couple of professionals as well before you do that, above and beyond your lender, just to make sure what some of the consequences are, and just so you have all the information. So what else are we seeing in today's market? We're kind of in the summer market, in the middle of COVID-19. What else are you seeing? What are some of the hot button things?
Yeah, with another thing around COVID has just been kind of verifying employment very close to our close date. Because with millions of people getting laid off, like lenders have to take kind of this additional requirement step for us, we do it the day before closing. We verify within 24 hours that they are still employed. Lenders might be 2 or 3 days, but all of us are doing something within a certain time frame from the closing date. So the only reason where I bring that up is because typically we want to ask the buyer, like, hey, do you have a direct contact with an HR person or a boss or payroll, someone along those lines that we can contact, that, because it is going to be kind of tight to that close date. So if you work at a large company and maybe it's just general HR thing, it's just nice to have a specific contact. So we try to get ahead of that and warn them of that a few weeks in advance to try and so they can warn someone that someone's going to be calling and we need an answer, within 24 hours. So we just kind of tell the title company, like, you can't close on this until you hear from us that we verified employment. So, no big deal, but just another step, I guess.
Got it. So not the end of the world for COVID-19 and home buyers. Things are still moving. Processes have obviously changed, with social distances and meeting in person. Hence our video today. We're not standing next to each other like we've done in the past. So, but yeah, any questions you have on the lending side of it, real estate side of it, let us know. We can get you connected here with Shane, and any specific questions, we'll forward those on as well. So thanks, Shane, for joining us today. Great information, and we will talk to you down the road. And anybody have any video ideas, please feel free to send them over and we will get them off to you. Thanks, guys, and have a great day.